Hello everyone, I'm Varnika, Senior Analyst with Twimpit. Welcome to the roundtable on millennial banking, fulfilling the next generation's banking needs. And today I have two really amazing industry leaders with me. Let me begin by introducing Huw Davies from Ozone API. He's a co-founder of the company and has over 20 plus experience in the banking industry. Joining him and me together, we have Michael Berns, Director for AI and Fintech, PwC, and also the co-author of the AI book. Welcome, guys.
Thank you.
Thank you.
Great. So today we are discussing a very interesting topic, and I think it's personal to me because I belong to the millennial generation. And so millennial generation is basically people who fall between the 18 to 40 years, and they have an experiential, omnivorous attitude towards life. And that's actually reflective towards their banking needs also, which requires them convenience, personalization, and as well as design experience. However, what is interesting to notice is that they struggle between identifying the same experience, this gamified experience in their banking products, because what I personally understand from my outlook towards banking, I don't want a bank to push products at me. I want the bank to fulfill my needs and be with me throughout my lifestyle journey. So today we're actually looking at how banks are trying to fulfill this next generation's needs from three spheres: from a product standpoint, a technology standpoint, and a data standpoint. So when we talk about product, and let me start with my first question here. So what do you think? What drives innovation in millennial banking products? Huw, let's start by understanding what do you think about it?
Yeah, thanks, Monica. And so Michael and I were talking the other day, and I don't fit within the millennial category. I think Michael said the same. So there are some things I can talk from a position of possible authority, but the experience in this one, I'm outside of that group. But I think it's interesting. But firstly, what you described, it's a massive age range. So within that, there's clearly going to be some real differences in terms of expectations. But I think it's obvious, and it is fair to say that expectations for how consumers, businesses engage with their money, engage with the banking industry have changed massively. They've changed massively, partly through generational shifts, and again, the demands of millennials is very different. Actually, in the last 6 months, the world has changed significantly as well, given COVID. So even those customers that were traditionally seen as those that would turn up at the branch, and they're not anymore. So actually, I think there's been a gradual and dramatic shift around expectation based on generations, millennials expecting differently. There's been a huge seismic shift as well more recently based on changes to the way we live. But I guess if I think about what is driving innovation, and there's a few different things. I think I look at my kids. My kids are teenagers. Their experience with banking and financial services has only ever been digital, and it is very experience based and gamification, as you said. So they've always known having hots and sweeps and all of these different things to help them manage their money. That's been there from the beginning. I remember getting my first bank account. It was a very, very different experience a long, long time ago. So there's an expectation that it's digital, it's easy, it's quick, and it's intelligent. You just need to look at as well all of the various different subscriptions we have. So Netflix, Amazon, my Netflix subscription, it doesn't matter whether I'm at home, on my laptop, on the mobile. It's sort of omni-channel. I can jump into the show I was watching in exactly the same point without a break. I think the expectations for how financial management, how customers manage their money will be similar. So it needs to be digital, it needs to be easy, it needs to be multi-channel, and lots of intelligence so it can help me get the best out of it. They're the things I'm seeing.
Yeah, exactly, because it's a pragmatic approach towards customer intelligence led kind of attitude that these guys have. And but with that, I think so the entire gamut of how baby boomers used to view products and how millennials view product is so different, and it's actually the gap is so huge that and now with COVID accelerating it, I think there's a transformation that needs to happen, and I think it's slowly taking that leapfrog jump, at least when I talk about from an Asia perspective. It's definitely a little more accelerated when we talk about UK, Europe, but from an Asia perspective, it's more like we're doing a generation leap when it comes to digitalization. So with that, what do you think, Michael? What would be those top 3 considerations when we're building a product proposition for millennials?
Thank you, Annika. I mean, it was good to listen to Huw, like him. I also fall slightly out of that age gap. So I grew up in a generation where for the World Savings Day, you bring a little book to the bank and you get a little toy. But I've also seen a financial crisis unfold. And for me, even though that's now more than a decade ago, it shaped some of this path from the marble stone entry to the bank and the brick and mortar banking to where we are now, where the brand in some cases matters more, regardless of whether it's digital or in person, that the branches just don't have the same meaning anymore. And in the same way, when you see this banking disrupted in this, then it's also a question of who's offering me the most functionality, rather than, okay, I trust this brand name longer because it's been around longer for 300 years, 200 years, and so on, to keep my money safe. So this kind of concern about what is safe, I think that got disrupted about a decade ago. Now, when it comes to those top 3 considerations, for me, it's still, and we heard it a little bit from Huw as well, the ease of use. It doesn't matter where I want to be in my life. It should be accessible on the mobile, because that's something that even my 2-year-old is now demanding access to my mobile or using it. So that comes from a very early age. But also the integrated side of things, where it's great if you have a nice current account, but the integration makes it then a unique proposition where from the same platform you can order different products, whether in the investment space, insurance space. The successful applications there, they have kind of built an ecosystem around them. So it's not anymore competing with others on just one product, but more in terms of who are they working with for transactions to abroad and for so many other services.
Right, I agree on that. I mean, we used to start using mobile phones when we were teenagers, and today we see the generation which I call Generation Z, and they've come up and they're using mobile phones since infancy. So I think they're far more ahead of even us as millennials. And I think that we're gonna see a different wave of Gen Z banking, and I think that's gonna be far more gamified than what we have today. So having said that, what do you think is the market opportunity when we talk about millennial banking, from the perspective of how do you think the banks and the neobanks and the challengers and fintechs are viewing this as a market opportunity? What do you think, Huw?
Yeah, it's a good question, and I guess as the point I started with, actually, that group from 18 to 40 is a huge group with such a diversity in it. I mean, you've got young adults just starting out in life through to kind of families that have been building some wealth for a while. So the needs are very different. But I mean, banks traditionally make their money from lending, from investment, balance sheet management, and fees. The opportunity to drive value from a customer gets greater at the points where they have needs to borrow for big things, and they build investments. The older you get, the more that happens. So the generation's going to obviously get more and more interesting to the traditional banks. But I think the market's changed so much now. Again, if you think about some of the different needs, there's still in the world a huge amount of unbanked and underbanked that haven't been well served by at all times by the traditional big banks. I think there's a great opportunity with far more digitally based financial services. With the advent of things like open banking, at Ozone API, we help banks deliver open banking APIs, and it's one of the areas you've seen some really interesting innovation at the margins. A market like Brazil, we do a lot of work in Brazil. There are, I think it's 45 million unbanked adults. That's huge. Now, if through a combination of the traditional banks, the challenger banks, the fintechs, propositions can be developed that bring that group into the financial mainstream, whether it's microloans or simple financial management tools or prepaid programs or what have you, that can create a huge benefit. Similarly, at the other end of the spectrum, you've got areas like investment management, where it's traditionally been all about relationships and direct advice and things like that. Now, actually, in the current times where all of the financial information starts to become available through APIs and customers can provide consent to share that, and you've got artificial intelligence and the potential for much more intelligent yet digital and efficient services, I think there'll be a huge change in the way investment management works as well, combining not just the traditional relationship, but with far more digital advisory services, robo-advisory services. So from financial inclusion end through to the investment management end, I think there's a huge amount of opportunity for change. I don't think it'll be the big traditional banks versus the fintechs. There might be an element of that. I think this is much more, there's a huge opportunity and there's plenty of space for everyone to play. And I think we'll see, and we see this already, a lot of the real value will be unlocked by combinations and collaborations between the guys who have the big balance sheets and the operational power and the fintechs who are, or smaller players who can really focus on solving a particular pain point for a particular customer type. So yeah, I think the opportunity is huge. I think it's huge for lots of different players, and it'll come about most likely, I think, through partnerships and collaborations between some of the traditional players and some of the new generation fintechs.
If I can just add that looking at the challenger banks during COVID times, I think what the situation did is that it really is like a stress test. And while the opportunity is great, we also see that in certain jurisdictions, maybe there were too many challenger banks all doing the same thing, and there will be some consolidation. But I believe that depending on where you are in the world, there's still a lot of opportunity out there. We are still at the beginning of this whole thing, right?
Exactly. I think that was what I was saying, that now the industry is moving towards collaboration and consolidation. They're like two different areas that are coming. There has to be both phygital, because the physical and digital needs to be there, because some people definitely like that physical presence. They enjoy that physical presence. At the same time, then there are this other set of millennials who would want to get everything on digital, because that's what I was researching and I was working on. And I identified after speaking to a few of them that I'm not comfortable till the time I don't go to the branch and I don't have a conversation with manager. At the other end, there's millennials who's like, I cannot talk to a contact center executive. I cannot talk to a relationship. It needs to happen on the phone. I should be self-sufficient. So that brings me to the next segment. It's around technology. And I would start with Michael, and I asked Michael that what is the percentage of millennials who are actually their queries are being routed through the chatbots, and how many of them are getting handled through, because one of the areas that we struggle at is like calling the contact center, reaching out to our relationship banker. We want to do it through the virtual chatbots who are there within our application.
So I had the honor of building quite a few chatbots and dialogue systems over the last 7 years or so with quite a range of vendors. So what I've seen is that even for any introduction of a new channel in chat or voice or even email automation, you want this impatient new customer segment. Yeah, I wouldn't just call it millennials, but I could see that the adoption rate from them for this new opportunity is much higher amongst them than for the rest of the firm. And we see that even in projects here. I wouldn't just put like a number to it, but given the wide range of age, like Huw was also saying, very rough estimate would be somewhere close to 50%, even though the age range is just 20 years or so. So a big chunk, and that then over the years also takes hold in other areas, even like private banking or investments, where maybe the customers in the past would expect their private banker to meet them in a personal meeting. They still want to do this, but they want to have an additional channel. And then the younger the customer is, the more desire there is for this chatbot. What we're seeing in Germany, though, is that we are somewhat behind in terms of the rest of the world, where, let's say in Asia, particularly Singapore, you mentioned earlier, there's a lot of chatbot 2.0 or more intelligent solutions out there, where it's not just a question-answer game, but very personalized identity for the bot, very personalized experience, but very knowledgeable about past transaction of that customer, very knowledgeable about what other customers of that age group and this background and transactions might do. So this is something that, at least for this German-speaking market, we're just seeing the beginning of, but which has already been there in US as well as Asia and certain countries for some time. So again, it depends where you are, but the expectations are certainly there for a faster, more immediate feedback channel. You can compare it to the Twitter generation, or kind of the immediate response needs to be there.
And do you think that it is actually, artificial intelligence is actually driving away the contact centers? We're going to see less contact centers and more queries being handled through bots and through virtual assistants?
For me, I've actually worked for some of those contact centers, and it's not really replacing them. I think we turned them more into outreach, right? So before that, they were just handling queries. Now the bot can do 70% or 60% of this, depending on the specific use case. But now you can say, okay, I've got this army of people there. I want to grow exponentially. I need to know which of these clients, based on the conversations, and AI can help with highlighting this. So which of those clients might want a different product? They probably don't want to just be randomly contacted by a chatbot about this, but if you use your contact center wisely, you can quickly gain a market share and use this for different means. So it's not always a replacement, it's just sometimes a repurpose, more routine on the bot side, change of address, many routine tasks, and more outreach, more client engagement for the call center. So you can use them for more sophisticated products that need personal advice, where people really want to speak with a person. But it's usually a shift. It's not just a replacement.
Interesting, because I personally do not like talking to contact centers. They make you wait for long.
Yes, but if it was a bigger product, like a mortgage or something really complicated, where you need a wide range of documents and there's a lot of dependencies, and I think the the bot could certainly do it, but you would feel more comfortable if somebody on the phone or video conference would advise you, yeah, you might still be impatient, you want your mortgage tomorrow and everything, but I think you would probably prefer a human for this, yeah.
Interesting. And what do you guys think that how does this enable customer stickiness? I know you said to a certain extent this intelligence-led is actually engaging the customer, and it actually brings the customer back through through the onset of both having the contact center and the robo-advisors. At the same time, when we talk on a broader perspective, how do you think technology helps these millennials to be more sticky towards or have more attach rates towards the banking products?
Yeah, so it's an interesting one. I mean, by the way, I love the term digital. I've not heard that before. That was a new one for me. But I think fundamentally, stickiness is not going to be purely driven by technology. I think back to the question earlier around what are the important considerations when building a product. Actually, if it isn't solving a problem or making something better and with great experience, to be honest, there probably isn't going to be stickiness. So they're the fundamental drivers, but can some of the technology developments help that? Absolutely. Again, we talked earlier around the seamless experience between channels and things like that. Technology can help you do that. Within the millennial, again, I talked not millennial, but I talked about the experience my kids have had with banking, where it's all about intelligently driven money management. They're sweeping into the pots to save up for certain things, and easy money management between us all. Again, in the world of, go back to it again, open banking, where we've now got more and more of our information becoming available through APIs, and the ability to take action in one platform through the APIs of another. Consent becomes a really important part of this as well. So actually using the technology really well to help create great experience that can be seamless between channels, but really has consent at the heart of it. So the customer's in control of, actually, I do want to use these channels, and I do want to share my information about all of my different banking products, because it'll help you get me a better deal, but based on my terms. So I think that creates a responsibility on banks to implement this stuff well. It creates a responsibility on third parties that are using that access to banks on behalf of the customers to do it really well. But as I say, I think, yeah, does this technology really help customer stickiness? I think it's a massive contributor, but it needs to be focused on how do I solve a problem or make something better, and with a great customer experience. So it's about making sure it's playing the right role in that balance.
Right. And what do you think, Michael?
Yeah, no, sure. From my side, I guess just adding on here that if there's a service that will save me money in a transparent way when I make my transactions abroad, or will give me slightly better interest, then this is kind of what draws me to the bank. What keeps me is that I can switch things on and off, that I kind of, like you guys said, I'm in control of how much data do I want to show, and that I get a good idea in terms of what are the benefits that I'm getting from this. So we can look at China there with WeChat, where pretty much all of the products are enabled, but that's maybe not a model that would use in Europe, where maybe people might be more cagey around sharing all of their data. But they probably still want some benefit, but they're rather keeping some of this back just for personal reasons. So it's kind of like this mix of the control, but the brand giving a real benefit that needs to be transparent to make them sticky. And then also things like classifying immediately any transaction that occurs into the account, then giving me an insight in terms of saving, how long it would take, what I'm spending on. All of this helps with the immediacy and with the transparency kind of really required by this new customer segment.
Great. So when you talk about immediacy and transparency, and you made a really great point that technology is a huge enabler, and one of the backbone of technology we say is data. And that brings us to the third segment that we want to talk about. So we started with introducing millennials as a gamified persona. They lack that kind of experience, and they want design experience, and they want customer like banks to be inculcated in their journey. But what do you think, and I think you would love to answer this, is when it comes to gaining information and building that persona, where do you think banks, news, challengers, fintechs are looking for? Like, who do they reach out to? What data sets are they looking for? Which category industry they're reaching out to?
That's a really good question. Now, to some extent, it really depends on what's available, right? So again, in markets like the UK and Europe, and where open banking's now been in place for a few years, there's the ability to access the account information for certain account types, but not everything. Actually, the data that a customer may want to share to really get the best investment advice, or as an example, actually not all of that's available at the minute. So there's a great opportunity for banks to actually open up more data for the benefit of their customers, and actually to help them benefit through being a better advisor and through creating those stickier relationships. But it'll be interesting over time, and we're certainly not there yet, to see in an open everything society where multiple data sources can be accessible through APIs with a common consent model and the concept of digital identity. How do you really unleash the power of these combined data sets? There are a number of really interesting proof of concepts and sandboxes looking at this at the moment, actually combining banking data with social media data and health data and other things to tackle challenges like how could these combined data sets help people with mental health challenges, or help the vulnerable, and weird things that you wouldn't expect around kind of day-to-day shopping patterns. Is that an indication that someone is about to face a mental health challenge? There's some really interesting potential from combining these data sets. I don't think the infrastructure's there yet, though, because not all businesses are exposing the data, and where businesses are exposing the data, we at Ozone would believe really passionately that you need interoperability, and that comes through standards around how APIs are exposed, and also really good practice around consent management. So ensuring that the right security protocols are in place and the right trust is there, so that the consent is managed really well. But I think there's a huge amount of potential for data to help accelerate innovation in the financial services space. We talked about some of the use cases around financial inclusion and micro lending, around the other extent investment management. There's a huge amount of use cases out there around personal financial management and SME cash flow management and bill payment. There's some really interesting use cases using what's there today, but in the future, where actually you can start to combine some of these data sets, as and when that happens, I think it gets really powerful. I don't know which will be the killer bits of data, but it'll be interesting.
Of course, I agree to that. I mean, from analyzing bite-sized saving and converting them into investments, to actually getting involved with the customer at the right beginning when even he has a thought about buying a house, and then being a part of that entire financial journey till the time the house is sold, he's made the payments, he's into that whole banking loan journey, lending journey, so on and so forth. And actually that brings me to my next question. And Michael, I would like to ask you that how comfortable you think, and because we are applying artificial intelligence, we're getting to know the customer end to end. How comfortable do you think millennials are when it's about sharing their personal identity?
Sure. For me, the comfort level that I have as an individual, also as a group level, it doesn't necessarily come from the age alone, but it depends more in which country am I growing up, what is the government thinking about AI, what are those subtle messages around, the end scenario with Skynet taking over, or alternatively, it's all black box and we can't control. So there's a good part of this perception of AI and with that sharing of data that is driven by the setup and the environment, the industry, parents, and so on. But you could probably prove it in the data. I haven't got the exact numbers here, but you could probably prove them in the data that for all the reasons that we talked about earlier, millennials are more willing to share their personal data, but I think they still question what benefit they get. So they might be slightly less loyal or more willing to switch banks. Yeah, in my time, you would go your little savings book and you would essentially take the bank that your parents had and you would carry that on. If I hadn't moved out of my initial setup and from then working out of London globally, having to change banks for locations and projects worldwide, I wouldn't have changed bank every year. And I think in the same way, there needs to be a reason for them to share this. We talked about the transparency and the benefits earlier. If they can get a slightly better deal or manage the money in a better way, do transactions differently, then they see that and they will be probably more willing to then share this. And we mentioned WeChat earlier as an extreme example, but let's say in China, from a government side, it's very clear that AI works, that it's a good thing to contribute to this, and because of the benefits that are transparent to people in terms of better deals, automatic suggestions, people are willing to do this. We are still some way off here, but I could still see this for certain offers that becomes more common. Let's say also Singapore, you can get insurance based on social media extraction from this if you're willing to. And I can see that certain areas of banking as well as insurance, the social media ingestion or kind of enriching profiles will be acceptable to people, but they want to be in control whether they use it. So they probably want to have a price comparison as such before they are willing to give that up.
Right, and you spoke about this, the consent and the trust journey, right? And that's the reason the second directive came in UK. Europe is anyways very particular about giving consent when it's about sharing data. So do you think there is a challenge there with millennials as well?
So it's interesting. So this question around confidence, I think it depends very much on the use case, right? If I'm I mean, lots of people use things like Facebook login and Google login, and if I'm sharing some simple data attributes and it makes my life easier, you think about that very differently than if I'm sharing 3 years worth of financial performance of my company. But so the use case, I think, is really important, and I guess. Also, I think you have a difference between behavior and what people think. So people say, oh yeah, I'm really, really concerned, but then they'll quickly skip through and ignore the T's and C's that they're supposed to read. I think it's human nature, but I think the trust and integrity, I think, will become an asset of the companies that do this well. So historically, the banks have been trusted because they've been big secured vaults and you know your money's safe. I think in the data economy, trust will become an asset that helps lead to stickiness. We've seen the Cambridge Analytica scandal, the impact that can have. As I said earlier, I think there's a real responsibility on firms that do provide APIs and engage in this sort of data sharing consent economy to do it well. And customers will vote with their feet if businesses don't treat it well. Then I think they'll walk. If they do treat it well, if it makes it much easier for me to sign up to Uber, as an example, by pressing a button that allows my bank to share my name, address, date of birth, and payment details, great. I would love to do that. But if it's abused or treated badly, there's no way I'd provide that consent again. So I think we'll see in the data economy. I think trust and integrity will be a real asset for companies, and those that don't do it well, customers will vote with their feet.
Awesome. And I think that's very true when it comes to us also. I mean, those payment mechanisms are invested in all the applications that we have, and that connection, that trust and integrity needs to occur throughout what we're doing, like in our daily lives. So that brings me to my last question on data, and I really want to understand this. So when it comes to a value delivering area, what is that the banks are trying to achieve with this API banking and open banking system, specifically when we talk about millennials?
I'm quite happy to jump in with a couple of thoughts, and then obviously Michael can build. So actually, there's one really important point. In a number of markets, banks are being compelled to deliver APIs through regulation. That might mean they're doing it in a slightly different order than they would if they were doing it purely on a commercial basis. So where regulation, like UK, Europe, Brazil, Mexico, where it's being driven by regulation, then the start point is typically make that account information available and the ability to initiate payments. That's creating a set of use cases and an ecosystem built around that access, which is I fundamentally believe is good for banks and the long-term health of banks, and it's good for customers and how they manage their money. But actually, in markets where it's being driven purely by commercial needs, you might see completely different APIs appearing first. It might be about, I don't know, trade finance and the ability to help corporates move items around the world and kind of finance that trade flow. It might be around sort of lending and alternative lending options. So I think the type of APIs differs a little bit depending on the market conditions. But you just look at what Google have done with Google Maps. They've created a foundation there that has become integral to so many other businesses. And banks have that opportunity. So they've got some great assets in terms of their balance sheet, their ability to manage risk, the products they provide. They've got an opportunity to build an access layer on top of their core assets, which mean they can be taken to market to far more customers than banks could ever reach on their own, and in far more innovative ways than the products and digital teams in banks could ever think of, as good as they might be. So I think there's a huge opportunity. We've just scratched the surface. So I actually don't know which will be the killer APIs that banks will publish, but it will be a combination of leveraging those assets of the financial information they've got, the identity information they hold, the ability to move money, and the ability to make risk decisions. They're great assets. Banks make those available. It's a really powerful platform.
Totally agree. What do you think, Michael?
Yeah, I would say that we've all kind of seen the vision of open banking now some 5-something years ago. And it really took a while to even see bank complying with the API guidelines and putting something out. I think over the last 2 years now, we've seen some of the larger banks to kind of use this to gain market share, to kind of use one account to get insights into many different ones and kind of bolt on. But I haven't seen anything that really astonished me or really said, wow, this is really living up to the full vision of open banking. It would be something like seamlessly switching the account with everything of a click of a button, and guaranteeing kind of a forecasted return of investment or something like this. The killer product is not out there. We're just really getting started. And I think for mainland Europe, we have some 1-2 years delay from UK, based on what I've seen when I was based there. But maybe, Huw, I mean, with Latin America, that's something I can't comment on. I would think it's probably one of those other markets that is driving the big innovation, and we just haven't seen it in enough detail.
Yeah. I think each new market will do it slightly better and slightly faster because they'll build on the learnings from the others. I personally don't expect one big killer use case. I think there'll be lots of incremental things that just make people's lives easier. I think we are seeing that in the UK. I think we're seeing loads of use cases that help people who couldn't previously access credit, who help make mortgage applications quicker, who help you pay your bills in a smarter way. So I think there'll be lots of those kind of small gains that they'll build up to that killer.
And
impact.
I think I see that ripple effect moving towards Asia as well, because that's where we learn from, and then we come here and we start. China, I would say, is an exception in that case, but definitely the other parts of Asia is still learning from what's going on outside and is actually trying to implement now. I see India moving towards that direction, Singapore, Malaysia, Hong Kong, I'll still say will be a part of China as well when it comes to these innovations, but still, I think there is that entire ecosystem is trying to reach to that level, but we'll definitely have a combination of killer use cases, as we say. With that, I want to take up 2 questions we have from the audience, and I think they're 2 directed questions, one for Huw, one for Michael, so that's interesting. So to Huw, the question is that is there a fundamental difference in API for AISP and PISP?
The AISP is access to the account information. PISP allows third parties to initiate a payment on the customer's behalf. So banks are exposing both these APIs. So you have to be regulated to be able to access account information or to initiate payments. Fundamentally, there's a common security layer that sits underneath that determines how the banks and the third parties connect and how that consent management piece works. But then, there are functional differences, because if I'm asking a bank for a bunch of account information, that's a different technical transaction than if I'm sending an instruction to make a payment. So you end up with banks publish a set of APIs to meet these different needs, all ideally under common standards. But yes, there's a fundamental difference, but based in a common way of doing things and a common security model.
Great. And to Michael, we have that what is the metric for success in AI-driven customer service in banks? Is it the speed to respond, resolution handle time, or do you think it's the automation rate?
Interesting one. So, the pain point is clearly on the speed. Let's say if you have waiting periods that are extensive, but when you do this as a practitioner, like in quite a few POCs that I've actually built with banks, then that success criteria that you arrange with them is a different one. Then it comes from the data science side. I could go into precision and recall, but in short, how good is the bot or the automation in picking up queries? How accurate does it interpret the intent? And can it, for example, also pick up if it's a longer request that there were 2 separate things asked? Because if we just go for the speed to respond, yes, we are solving the main pain point. But if the bot isn't good enough in terms of really understanding what the customer wants, then we are just annoying the user, or we're making it more cumbersome to actually get to what they need. So it's really more about the accuracy of predicting what they want and figuring out whether there's a secondary or third question in there as well. So in the POCs that I've done in that segment over the years, you hope to get to somewhere 75, 80%. That's kind of a good rate for detecting intent in customer queries. But of course, it depends whether that's a general chat for everything or if that's already kind of pre-filtered by certain topics and so on. But yeah, it's not really possible to 100% automate. So this general AI isn't there yet. But even if you get to 80%, it's a good rate to hit and will dramatically improve the perception of the clients using that service.
Awesome. So it was a great session, but I want to have concluding thoughts from the both of you, especially in the scenario that we're living in today, whether it is COVID as what we see today or the post-COVID era. Do you guys think there's going to be, or there is a behavioral change in the millennials and how they're going to perceive the way they manage their money and their approach towards saving, spending, investing? Huw, why don't you take that up and then Michael will follow us.
No worries. I'll finish with the same caveat that I started with. Not being a millennial, a little too old for that, unfortunately. But listen, I think the unprecedented times we're going through at the moment are meaning the way that we manage money, the way that we shop, the way that we live our lives, consume entertainment. All of those things are changing. In the banking and financial services world, that's accelerating something that was happening anyway. And it was happening anyway because of the changing expectations of millennials, far more online, far more instant, intelligent. Gamified I'm not sure that necessarily works for all sections of the demographic, but kind of certainly changing the way that financial services is consumed. I think it's accelerating that the current COVID crisis. I don't think it's something totally new, but even the way we work is massively different. We were talking earlier. I haven't actually been to an office properly since February, and actually it works. I think it's a great opportunity and a great risk for anyone in the industry at the moment. So great opportunity for customers, because I don't think there have ever been more participants trying to do things better for them. So it puts a lot of power in the customer's hands to use the services that solve the problem best, work best for them. But it means the traditional banks, the challenger banks, the fintechs, they've got to get this right. They've got to compete really hard for that customer attention and make sure they are solving pain points, adding value, doing it with great user experience. So all of the points we talked about. So I think it accelerates rather than fundamentally changes the direction. But yeah, it's interesting time.
Correct.
From my side, I agree with pretty much all points you raised here. I see it as a big accelerator towards a digital-only format. Yeah, I'm kind of working for a company where it's all about processes and advising and optimizing them. I see that in the future there will be, you don't start with the legacy process and the legacy systems, but you kind of really think the customer journey through in digital, immediate and fast. And I think that is adding to, do we need the branch network that we have now and so on, adding a lot of new thoughts in terms of how to set this up. So yeah, some more bigger changes ahead for sure.
Great. Thank you so much, guys. I think this was really insightful and we really have a path looking forward to in terms of millennials. Let's talk soon again, and thank you so much again. Have a great rest of the day.
Thank you.
Thank you. All the best.
Thank you. Bye-bye.